Imagine receiving a paycheck every month, not from a job, but from your investments. Sounds like a dream. Today, we're turning that dream into reality. I'll show you how to build a dividend portfolio designed for consistent monthly income. Plus, if you're new to dividend investing, don't forget to check out our video on the 5 types of dividends you need to know, linked in the description below. Let's get started. What makes monthly dividend investing unique? Most dividend-paying stocks issue payouts quarterly, but with strategic planning, you can structure a portfolio to generate monthly cash flow. This approach not only aligns with household expenses but also allows for quicker reinvestment opportunities, perfect for compounding growth. The key: dividend payment calendars. To achieve consistent monthly payouts, you need to align your investments with companies paying dividends in different months. For example, January, April, July, October, companies like Coca-Cola, KO, and Pfizer, PFE. February, May, August, November, stocks such as Microsoft, MSFT, or Verizon, VZ. March, June, September, December, dividend aristocrats like Procter & Gamble, PG, or ExxonMobil, XOM. For a deeper dive into how dividends are calculated and distributed, check out our video, What are dividends and how do they work? Step 1. Identify monthly dividend payers. Some companies and funds simplify the process by paying dividends monthly. Examples include Realty Income, known as the monthly dividend company; Stag Industrial, Stag AREIT focusing on industrial properties; Main Street Capital, Maine, a business development company with a reliable track record. These can serve as the foundation of your portfolio while you diversify further. Step 2. Diversification for stability. Reliance on a few companies for income is risky. Diversify across sectors, utilities, consumer staples, healthcare, and REITs. Example: pair Johnson & Johnson, J&J, for stability with growth stocks like Apple, AAPL. Geographies: add global dividend players like Unilever, UL, or Nestle, NSRGY. Dividend yields and growth: blend high-yield options with dividend growth stocks to balance income and capital appreciation. For insights into building diversified portfolios, our video on dividend growth investing versus high-yield strategies is a must-watch. Step 3. Use ETFs for simplicity. ETFs can fill the gaps for those who prefer a more hands-off approach. Consider SPHD, Invesco SP 500 High Dividend Low Volatility ETF, a focus on high yield. Stable Stocks, DIV, Global X Super Dividend ETF covers global high-yield dividend payers. JEPI, JP Morgan Equity Premium Income ETF combines dividend income with option premiums for enhanced payouts. Step 4. Leverage reinvestment for growth. Reinvesting dividends through DRIPs, dividend reinvestment plans, is key to compounding your wealth. For example, investing $10,000 in a monthly dividend stock yielding 4%, with reinvestment, can grow to nearly $15,000 in 10 years at a 6% annual return. Our Compounding Interest Explained video will give you a clearer understanding of this powerful concept. Step 5. Monitor and adjust regularly. A dividend portfolio isn't a set it and forget it strategy. Regularly review payout sustainability. Check metrics like the payout ratio, company performance, look for consistent earnings growth, portfolio balance, rebalance annually to maintain diversification. Risks to consider: overconcentration in high-yield stocks can lead to losses if payouts are cut. Market downturns can erode capital, especially for sectors like REITs and energy. Tax implications vary based on the type of account and the location of dividend-paying companies. For an in-depth discussion on these risks, see our video on Top 3 Dividend Investing Mistakes to Avoid. There you have it, a roadmap to building a portfolio that pays you every month. With a combination of strategic planning, diversification, and reinvestment, you can turn dividend investing into a reliable income source. Have a question about dividends? Drop it in the comments, and I might feature it in our next video. Don't forget to like, subscribe, and hit the bell icon to stay updated. See you next time.